Hello and welcome to this week's Market Outlook webinar. If you're watching the recorded version, it was held live on Wednesday, the 10th of January at 12:30 in the afternoon. So this is a webinar we do every Wednesday lunchtime, and it's two sides to it. We look at the major markets and we'll also do a bit on strategy. And this time around, we're going to take a look at trading pullbacks. So looking at ideas on sort of where and how to get into a trend. So I think that's the plan for today's webinar. So let's get going. So I think the risk warning's been up for long enough. So let's take a flip onto the platform. What should we start with? We'll start with pound against the US dollar. I think currencies and indices, or the currencies actually, euro dollar, pound against the dollar, are interesting because of the moves that we saw last week, maybe more so for the euro, but it's a similar thing for the pound. So let's just remind ourselves where we are in the great scheme of things for the pound. So this is pound against the dollar going back to just before the Brexit vote. So the summer of 2016, falls off a cliff, pushes lower, and then for most of last year, we had this recovery, and this recovery is still going. So we're still in this overall trend from last year. So from a longer term point of view, any weakness, in the pounds looks like a buying opportunity. We've got lots of support for pound US dollar. We've got support, those lows in December ahead of 133, then really big support ahead of 130, bigger support again back here from August around about 128, and that really coincides with where the trend is at the moment. So at the moment, it would take weakness to 128 to change this trend. So from a bigger picture point of view, any weakness does look like a buying opportunity. But let's just zoom in a bit to what's been going on lately. I think what's been interesting, over maybe the last month or so, we're coming back up to what's clearly proving to be a big level, and it's the highs from September. So back in September, it got as high as 136.60. Sold off a chunk, sold off 600 points back to the 130 area by October, and we're back up here again. So clearly, I think this is the big level to watch. If we're looking at what's a level to watch for the pound during January, it's this 136.60, and I think if we can crack this level here, it opens up the potential for a much bigger recovery. We start then pushing into where it was trading during the overnight session following the referendum vote in June 2016. And I think, we can start targeting the likes of maybe, 140, this sort of area. But that's the hurdle that needs to be cleared. I suppose you could say in the short term, for fans of the oscillators, we do have, bearish divergence going on. We've talked about this in the past when we've talked about oscillators, the fact where the market makes a high, oscillator, this is a 14-day RSI, oscillator goes overbought, market pushes a bit higher still, but the oscillator makes a lower high. So this is bearish divergence. It's normally a sign that maybe the trend is starting to run out of steam in the short term, at least. So that, there's an argument for it maybe forming a top up here, and we can see what a barrier that's been. To give you an example of it in the past, the last time we had it was really back here, back in April last year, where the market pushes to a high, pushes higher still, but the RSI is falling away, and it did end up being something of a sort of short to medium top. So we'll see how that pans out. So I suppose the argument is, if you really wanted to go short the pound, it's a logical place up here with stops above that 136.60 area. Let's see what happens. So it's been, I think maybe the trading in the last week or so has been a bit inconclusive, but the market clearly doesn't like it too much up around 136. So let's see what happens. I think euro dollar is maybe a bit more interesting. Euro dollar. Let's just bring that up. What's it doing today? There is a bit of strength coming back, because like the pounds, we had this great run in euro dollar from April last year up until September, and it hit almost on the nose. I think 121. I think it got to 120. 92 or something like that. Yeah, 120.92 was the level it hit. So if we just pick up on that, there we go. So 121 is the level. And then if we just zoom in, when was it? Last week, so 5th of Jan, trades up and gets to 120.89. So it comes within 3 points of that old high and then turns round. And since then, we've sold off a bit, but it's turned around again today. So I think, again, like the pound, there's a really obvious level to watch. I think if we see 121 broken, let's just take this out a bit. Actually, we've got to go maybe flip it over to a weekly chart to go back further enough. Here we go. So there's a level back there. And again, there's an awful lot of fresh air because it fell so heavily in the sort of the first half of 2014 from the 140 level. You know, it fell. So that's a 2,000 point move. And we didn't really have much left in the way of sort of previous resistance, you know. So I think if the euro can crack 121, you know, 126 looks like an obvious target. The old November highs, first of all, then maybe on to 129. So I think there's an awful lot of fresh air, more so for the euro than there is for the pound, I think, if we do see that level crack. And I've been watching this sell-off for the last 3 days, waiting for the strength to come back in. It has come back in today with a vengeance, but actually this might tie into buying pullbacks actually. So let's just pick up on on this move from the November low. So we're looking at something like that. So for me, any weakness from this level was a buying opportunity. The question as ever is, where are you going to put your stop? So let's just take a look at the hourly chart for euro dollar. Let's bring that up. Okay, so there's the sharp move from about 10 o'clock this morning. And just because we've seen, what is it, about a 60, 70 point move in the last 3 hours, you know, it doesn't necessarily mean we're going to go zooming back up to that 121 level. You know, we could get an opportunity here to buy back in. So I'd say maybe the first trade for euro dollar, if over the next couple of days or even this afternoon, you know, we gave up some of these gains, some of this surge that we've seen this morning, how does it perform when it gets back to these lows from yesterday? So let's just pick up on those. So these lows down here from, what's that, 1 o'clock yesterday afternoon, so ahead of 119. So I think, so for me, the trade is, let's say it sold off and we're back at maybe 119.50 and we see some strength coming back in. It looks like a retest of yesterday's support. So I think that's maybe one idea, one trading idea. Buy the pullback back to the mid 119s, a stop the other side of 11900, I think, and then looking to see if the market has another go up at 121. And it's a trade that does make sense from a risk reward point of view. You know, if we did see it drop 50, 60 points from here and we're getting in at 119.50 and we've got a stop maybe just below 119, we've got a stop of 50, 60 points, and then we've got 150 points up to that target. So from a risk reward point of view, that does make sense. I think that's one scenario for euro dollar. If we pull back and breaks through this level, I think then again it's just a question of waiting again to see what happens. You know, what happens with these old lows back here, back around about the 118 area. You know, and this does tie in with the whole idea of buying pullbacks, of having the patience, like we saw in these little rallies back here in just the week before Christmas. The market runs away, pulls back, and do we see it form support? And that was, you know, that was a good opportunity where it pulls back to a level, rallies, pulls back again. We don't definitely know this trend is going to continue, but we have a definite reference point to place our stop loss, you know, the other side of immediate support. And I think there's an even better example that's happened this week in dollar Swiss. So we'll take a look at that in a second. But I think it's interesting. I was expecting this strength to come back in euro dollar, maybe not quite as sharply as it's come back this morning. But I think if we do get the weakness, do we get like a second bite of the cherry for euro dollar? But going back to the daily chart, it really is a big level to watch, that 121. And you can see again on the daily chart, like we had for pound against the dollar, you know, there's lots of support. We've got big support back here at 117. We've got that interim support at 118, and it's all round numbers. And we've got the short-term support from yesterday at 119. So I'd still definitely be looking to be a buyer of euro dollar on dips. Let's take a look at dollar Swiss. Just to explain, that's interesting, the move today. Just to explain a bit more this idea of buying a pullback, or selling, of course, a pullback in a rally if we're looking to go short. We've looked at dollar Swiss a few times, and I think what's been interesting for dollar Swiss is this is the longer term chart. So this is the daily chart. And in 2016, the market slid for the first half of 2016, spent a big chunk of the summer going sideways in the sort of 94 to 96 area, and then rallied. Last year ended up being not quite a carbon copy, but a similar sort of move. You know, we saw euro-dollar sell-off for the first half of 2017, hits these lows in the summer, and again it's these old lows from back here around about 94 Swiss, not euro-dollar. Rallies, gets the pullback. There's our pullback. It did sort of dibble below that support, but there's our pullback off the previous big level, and the market then rallied strongly into the end of the year. But it spent the last 6 weeks of last year sort of giving back some of those gains. So the trade I was watching really was how it performed. If we zoom in a bit, here we go. So on the way up, we had definite support in this sort of area down here, around about 97. Last week, or beginning of the year, it came back to 97. It's held, and we saw quite a strong move up until yesterday. We've moved about 150 points off that level. So I think here's another great example of maybe a pullback trade setting up in dollar Swiss because of the size of the move today. So let's flip over to the hourly charts to pick up on those levels. Here we go. So you could say, and I think quite fairly, this bit of the downtrend is definitely over. So when the market slid from Boxing Day around about 99 down to 97, so we had a 200-point move. The market then started this year fairly positive. We can pick up on our little trend there, and even though it's fallen out of that trend line, for me, we've still got all of these support levels still intact. So I think for me that the trading opportunity here, I mean, I suppose an aggressive trade would be to be a buyer now, or maybe you want to wait and be a little bit patient. So for me, the ultimate place, excuse me, for a stop loss would be below 97. So below these lows for the year so far. So we're a buyer at wherever it is, 97.70, with a stop loss somewhere the other side of 97. If maybe you want to be a bit patient and see if you get a better price, we could see what happens over the next few hours and into tomorrow. Does the market pull back more back down to 97.50? But I think, looking at what dollar Swiss is doing there, I think that is the obvious trade. And again, it's a pullback trade. We've seen the start of a new trend. The market's got clobbered, but we are seeing these old support levels hold. So, and it's also on the RSI, it's also tying up, not surprisingly, with such a sharp sell-off. It's spiked into oversolds, and so that does maybe build the argument for something of a bounce back from this sort of level. Let's see, but I think it's a really interesting one to watch. Arguably at the moment, in the short term, it's more interesting than pounding against the dollar or euro dollar at the moment, because we are pulling back into these levels. But I think the important thing is when trading pullback, and I use pullbacks an awful lot. I do lots of individual trades on US shares that typically run for weeks, months, and I think I've mentioned I've got a couple that have been running since I think September 2016. So for me, what I look for is this sort of thing, where the market looks like it's broken out of a trend, has a bit of a move up, comes back and holds above a previous low. But the really important thing to get right, I think, to try and trade these pullbacks successfully is not to have your stop loss too tight. Don't start off. Let's take this as the perfect example. So we think that, or I think that dollar Swiss is going to rally from here. I think there's a chance of maybe a move back up to these old highs, at least from beginning of December at 99.80. So I think there's a chance of a 200-point rally from here. I think the really important thing is to give the market time to prove your trade right. So don't miss out on a good opportunity that you've spotted for the sake of having a really tight stop loss. That there would be an argument, if you thought it was going to go up, for having a stop loss underneath the low from the last hour. But for me, that's so at 97.50. So the stop loss is maybe 20 points away. But for me, that's far too aggressive a stop loss. I'd rather have a much wider stop loss below here, or ideally below these old lows, trade a bit smaller, but be able to, sit out the hour-to-hour volatility. Because I think there's one thing I've learned over the years is that my timing is always off. It's very rare, and I'm sure it's the same for you. It's very rare you put a trade on, and then bang, in the next 5 seconds, it starts moving. exactly the way you thought it was going to go, and it's all easy money. You know, I think in reality, you know, we have a lot of stuff like this where maybe, let's say you'd bought in here, it moves in your favor, it looks like it's going well, then it comes all the way back, then it chops around, and da, 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 da. So I think it's, if you're trading pullbacks, you know, it could be the start of a really big move in a new direction, but you need to make sure you're still on board, you know, so you need to give the market room to move around. So for me, the dollar Swiss, the ideal stop loss, if it breaks 97, the argument of a recovery at the moment has gone. You know, if it breaks 97.37, a recovery is still possible. So for me, the logical stop loss is below here. And again, it's not a bad trade at all. If we're a buyer where we are now, 97.70, if I think it's really going to go back to 98.80, which looking on the dailies does not look ridiculous, I don't think. You know, even higher. So I'm expecting a rally up to there. You know, I think that ultimately I'll go back up to there. So I've got potentially 80 points upside here. 80 points upside, no, 80 points, what am I talking about? 80 points upside, 200 points upside from where the market's trading. No, my maths is completely out today, isn't it? Hang on, let me do this again. So if it's going to go back up to here, 99, so it's 140 points from here. So ideally, I'd want a stop loss of 50 points or less. So ideally, I would be wanting to get in around about this sort of area to have my stop loss the other side of 97. So for me, I'd need to be a little bit patient on this one. But I think dollar Swiss is an interesting one to keep an eye on. Right, that's a bit about trading pullbacks and looking at currencies. Let's take a look at some other markets. Let's start off, of course, I think with US markets. Where are we? S&P 500. Let's do that. Any prizes for guessing what the S&P 500 has been doing lately? That is correct. The S&P 500 has been going up. So just yesterday, again, yes, I know every week we do this, say the same thing, just goes up. Right, just yesterday, we saw fresh all-time highs for this market. It did sell off as the session went on, and we're looking at a weaker start today. But I dread to think how much money has been lost by people trying to call the top in this market for God knows how long. That's going back to what, the summer of 2016. There's the one we always look at, the election from November 2016, the volatility and blah blah blah, and then since then the market really hasn't looked back. So if we pick it up off this trend here, you know, our S&P trend looks something like this. Okay, so we've got the trend line coming in about what, 25.30. The market's at 27.40. So we'd need a 200-point decline from here on the S&P just to threaten that trend line. So what's that? The best part of, I don't know, what is it? 6-7% decline. You know, a real chunky decline from here to even put that trend line into question. And that's not even looking back at the bigger trend from the financial crash lows. You know, so this is a market that remains incredibly strong. If you were trading off indicators, you'd have just been wrong-footed left, right, and center. This is the RSI, and it's went overbought in October. Market doesn't care. Bearish divergence. It worked for about a week. Overbought again. Well, I didn't do too badly there, I suppose. Bearish divergence. Market doesn't care. Keeps going up. Overbought again, and the market has kept going up. So I think, you know, for indices, it's still very much a buy the dips level. So many support levels left because the market, you know, whenever the market has had a bit of a wiggle, it's just taken off. So, you know, down here, the lows from early December, about 26.20, then lows here, lows from in between Christmas and New Year, that looks like a 26.60-ish, and here we are. I mean, it has risen incredibly strongly, you know, since it broke that 2600 area. It has just gone like a rocket. Let's have a look on the hourlies. Let's see what we can expect today. It was a bit of a turnaround today. You know, we don't see yesterday. Sorry, we don't see. I'm getting used to seeing not much volatility. This is an hourly chart. This is an hourly chart of the year so far. So if you'd have bought it at the end of last year, you'd have been a buyer at what, 26.70-ish, and then you just held it. There was hardly a wiggle up until yesterday, and you'd have made 90 S&P points, you know, so many hundreds of Dow points, you know, if we were looking at the equivalent move in the Dow, because there really is no volatility. So yesterday we had a bit more volatility as the day went on. It's interesting coming in today. So again, you know, if you're like me, you just think, well, this is a market that just always goes up. We've got an obvious level to watch going into today, 27.35. It's already held overnight. So it's the lows from Monday lows. If that breaks, you know, lows down here ahead of 27.20. So there are just so many potential support levels, and it just never threatens them. You know, we hardly ever see major levels or two major levels in a row broken. So it's a market that's still incredibly strong, and we should expect it to move higher. Let's take a quick look at the Dow, then we'll look at the European indices. So let's have a look. Where are we on the Dow? Look at that, absolutely ridiculous. So let's flip it over to a daily. So the Dow, there we go. So we've bust through 25,000 this year. Let's flip it over to an hourly chart, so we can have a look at the short-term stuff, maybe some levels to watch. Like the S&P, the level to watch are the lows from a couple of days ago. You know, if you're watching the market this afternoon, it's the lows from a couple of days ago on the Dow. So 25,240, which again has held overnight. If they get given up, 25,090, 25,100 looks like a level. But again, I'd say, you know, bet against this at your peril. We are clearly one day going to get a massive sell-off. It's just you know, if you're playing probabilities, is what we're doing when trading. You know, why sit there betting every day for the market to collapse when actually the easier money is made on just betting that the market's going to go up, and then one day it does collapse, you get stopped out, and that's fine. You know, it's much, as we all know, I think by now, it's much less painful to go with the trend. But you know, it's a market that's still incredibly strong. Let's bring it back to Europe. German 30. Here we go. So look at the DAX, the crazy DAX. Let's bring that. Let's have a look at the dailies first of all, and there's the weeklies. So there's the daily. So again, you'd expect, I mean, I don't watch the DAX, I must admit. Oh, that's interesting. Okay, so even though US markets have pushed out to fresh all-time highs, we haven't quite seen it on the DAX. You know, we had the all-time highs back here in November, and we haven't seen it. The DAX does tend to do its own thing, but I think, you know, again, if we take this out to wherever and pick up on the trend, you know, there's really no need start worrying about the, you know, trends being over unless we saw the DAX go crashing through what, sort of 12,500 at the very earliest, you know, so maybe a 5% fall from here and then much bigger support back at 11.8. So I think, again, even though it can be a bit of an odd market, the DAX, that trend is still most definitely up. And finally the FTSE set fresh all-time highs. Well, hey, so we knew it couldn't keep it up forever. It's stubbornness to break out. So all for most of the last 6 months of last year, we were looking at these levels, 7,600. So they were the all-time highs set in June, failed at them in August, failed at them again in October and November. They did a great job, this 7,600 level, of stopping any progress in the FTSE. But finally, in the run-up to Christmas, of course, the fabled Santa rally. So it was Father Christmas that delivers the break out to fresh all-time highs. And it looks like actually it's done it today as well. It looks like on the daily chart, it's pushed out today. So it's a major break, you know, to break through a level, to break out to all-time highs after being trapped for it for 6 months while everything else was pushing out to fresh all-time highs is a major break. The FTSE is a bit of a funny one, of course, because if the pound strengthens, it does weigh on the FTSE. But this is clearly a bullish sign for the FTSE. Finally, let's flip it over to the hourlies. You know, there's our trend sort of through that break and beyond, and so much of it will be dictated by what the US markets are doing. But you know, clearly we've got a nice little trend chugging along there on the hourly chart, looking something like that. Plenty of support. If we dip back to sort of 76.80, this was a bit of an area. 76.50 and 76.100, the old highs. So again, I think with the FTSE, if we were looking at sort of swing trading it based off the hourly charts, you know, looking for positions over a couple of days or so, it still looks the more sensible approach is to be a buyer on weakness rather than a seller into strength. So again, looking to trade the pullbacks. And just one more, on this pullback thing, I mean, there's a move. This is the end of the year, so it's always a bit odd when the market, does break higher, but pulls back. And it's. I think these pullbacks, if you have the patience to wait for them, and I think we shouldn't underestimate, how difficult it can be to be patient if you think a market's going to suddenly start moving. If you have the patience to wait for them, like these sort of trades, you have really obvious support levels to place your stops under, rather than just maybe picking a random level. And then it's just a question of sitting it out and giving the market a chance to prove you're right. So on the FTSE, for the FTSE, the most obvious support for me is around about 76.80, the most immediate support, so about 50 odd points away from where we are now. But still strong. I think it'd be an interesting afternoon this afternoon in the S&P, because it did for stock markets, because it did feel for the first time in maybe at least a few weeks, there was a little bit of what's going on with the US markets yesterday, because they did, after pushing out, if you look at the short term, this is a 10-minute chart, so after pushing out in the first half of the session, so 6:30 UK time, so about 4 hours into the day, they did reverse pretty sharply. So I think some welcome volatility yesterday on the S&P. So I think it'd be interesting to see how today goes. But again, if we're talking about it in a week's time, if I'm a betting man, my money would be on it being higher than 27.40 in a week's time, just based on these recent trends. Let's see what happens. Right, gold and oil. Let's do gold first of all. Gold was these last few weeks in December, really big move, relatively speaking, on gold. Let's have a look. So I think it's been a difficult market to trade. I think, as I've said a few times, I'm still bullish on gold. I think let's go back. I'm jumping around all over the place here. This is the weekly chart on gold, and I've been bullish for a few years from a chart point of view. Because we'd had years of declining prices in gold since those highs in 2011. But sort of earlier last year, 2 years ago now, isn't it? For 2016, the market managed to shake off this weakness, shake off this slide that had dogged it since 2013. And then it had a little rally, pushes lower, but doesn't take out the old lows. And then for a lot of last year, the story was one of recovery, but it was quite a messy recovery. I think it was a difficult market to trade, because we ended up having trends where trends like this that would break, and the market would push higher, break through the trend line and push higher, break through the trend line, and then it push higher again. So if you were trading off trends, I think it was difficult. It was really messy, and it's quite rare to see a market quite as messy as that. And we had it again at the end of the year. So at the end of the year, the market fell out this trend line. Let's just zoom it in. Fell out this trend line, broke below the old support at 1260, bang, 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 bang. Hits a low of about 1240, the 12th of December, and then by the 4th of Jan, it's trading at sort of 1322. So we saw an $80 turnaround in 3 weeks. So I think more than any other market, it's really important to get the entries right on gold, because it's really dull for a long time, and then suddenly it really starts moving. So so I think it's going up. I wouldn't want to be a buyer here personally. Maybe after the move we've had, it's due a bit of cooling off. So maybe if we see it dip back down to this whole 1250, 1275 zone, it looks like a buying opportunity. For fans of the squiggles, we are overbought on the RSI, which does lend weight to the fact that it's maybe come a bit too far too fast. But what's interesting, as we're picking up on big levels, we were on the euro and on the pound, we got these highs left from July 2016 at 1375-ish, and then 1360 highs from last year. So that whole 1360 to 1375, big barrier for gold this year. And again, I think if we can break that, there it is on the bigger picture. We can start looking at a run back up into the 1400s. So we're sort of threatening August 2013 high. So I think it is bullish. It's just a little bit of a bugger to trade it, I think, just based on the trends. But so for me, if it sells off from here, it still looks like a buying opportunity. And finally, oil. We got the break. We got the break on oil at the end of the year. Oil. So oil. Look at that. And again today, fresh all-time highs for that trend. Anyway. So let's look at the. It's breaking a big. It's really interesting oil. going into this year, because last year, the way it ended last year, it looked really positive. So if we go back, not last year, 2016, if we go back to the end of 2016, it looks like that. So the market had moved out, broken out through the old highs, was trading up around at 56, looked really bullish. And I was expecting it to get back into the 60s pretty quickly in 2017. It did get back into the 60s, but first of all, it went all the way back down to the mid 40s. So it really wrong-footed, I think, sort of classic trend followers like me, beginning of last year. But there we go. That was last year, and there's our recovery, and now we're here. And so we've broken through. We're now at the best levels for oil since December 2014. So this is a 3-year high for oil. So based on conventional wisdom, we'd expect the market to move a lot higher during this year. When it slid from above $100 a barrel in June 2014, it slid pretty heavily. So it's left not much really in the way of support or resistance. But before we get too carried away and start talking about $100 oil, let's just zoom in a little bit just to see, I think, what the levels are. So here's the move. Here's the move from the lows, the June lows, around about 42. So we were looking at this trend all last year. That trend is very much intact. So again, on oil, we have to be a buyer on dips. So our trend, let's zoom it in, looks something like this. It is overbought, which isn't surprising given the move, but big support left, really big support down here in the mid 50s. So even if the price of oil sort of crashed, moved $6 from here, went down 10%, it still looks like a buying opportunity. We've got these support levels sort of stacked up, 55, 56, shorter term support just ahead of 59, support from last week ahead of 61. So I think like maybe the S&P at the moment, but not quite as dramatic as the S&P. Any weakness in oil looks like a buying opportunity. I think it's only if we lose these mid 50s does it look like the trend from last year is over. But it's interesting that it is trading up here, just moved through those old highs. So I suppose if you were looking at this in isolation, where's it going to go next? I think, I don't know, 80, maybe 80-ish. Doesn't look too ridiculous. But based on my view last year, I'm sure it'll go crashing down to 40 before it goes to 80. But it's a big break for oil, breaking through last year's highs, breaking through 2016 highs, breaking through 2015 highs now. Some big levels getting broken. So there's, at the moment at least, there's definite momentum behind that. Okay, we'll start wrapping things up there. So markets to watch. I think dollar Swiss, that dollar Swiss chart in the very immediate doodah future. Can't find it now, of course. Where is it there? Dollar Swiss, to see how it performs off these old lows. The S&P this afternoon, because we did have quite a volatile day yesterday. So just to see how these markets perform, maybe we get a bit more volatility this afternoon. But again, you'd completely expect the buyers to come back in on this. And euro dollar, maybe one for the patient. So we've had that sharp move in euro dollar. Oh, it's starting to come back. If it starts to dribble back to here, do we have the pullback, the retest, blah, 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 and a good trading opportunity, and oil, which is going to the moon. So I think there's a lot there to keep an eye on. And last week was always a bit of an odd week, the first week back after Christmas. So I think this week we are definitely seeing more normal, traditional trading. So things are getting back to normal. So thanks for coming along to the first one of the year. We'll wrap things up there. I think, let me just put my details up. Any questions? So any questions, drop me an email, david@tradeafter.com. You can follow me on Twitter for charts and stuff during the week. I'm at Jones the Markets. And to read some stuff on my website, go to www.tradeafter.com. But for this week, for the first one of the year, we'll wrap it up there, and we'll do it all again in a week's time. Thanks very much. Happy New Year to you as well. Thanks all.